Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. It was one of those days where the summer doldrums had definitely settled in. Most of the majors zigzagged, turning left and right, right and left, never really establishing any rhyme or rhythm to the trading day. This should all change though tomorrow or beginning Thursday in early Asian and European trading when we start to have a little bit of data flow that could have impacts on the pairs and could have impacts on risk sentiment as a whole. The first piece of data to come out will be the Australian employment report, which is expected to come in around with an increase of 10,000 jobs, and the general employment rate is expected to come in by economists at 5.3%. If the pair has any deviations in these numbers, if we get a greater employment number, we could see the Aussie USD shift higher and actually break above the top of the trend line that has been containing it. And its first objective would also be to break above a 10.063, which is the daily price level that the pair is about to run into. That's acting as resistance. If we break above that, though, we could be in a run for the run see a test of the highs of the year. And our first level of resistance would be 10850. But the other thing we need to keep a lookout is not just the employment number of 10,000 or the employment rate of 5.3. It's the amount of full-time and part-time rate. It is expected that the full-time jobs, or they're actually going to be a decline of over 33,000 in that area. And then in the part-time, there's going to be an increase of around 6,000 in that area. If we get a larger decrease in the number of full-time jobs, or if we actually get an increase in the number of full-time jobs, we could see a marked move in the unemployment report, in the Aussie USD. Now, if we have a disappointing report where we get a negative number, we could see the pair move all the way down to the 104.35 area. Or we could see the pair start to drift down towards that lariat level. And what we want to watch for is a break of the 105.30, which has been the low so far this week in trading. The next pair we're going to take a look at is the U.S. CAD cross. The U.S. CAD cross it's very interesting because it's been riding this channel lower. It's actually kind of been the inverse of the Aussie USD over the last 2-3 weeks. But the pair is running into a bigger problem right now. It's running into a daily trend line that goes back all the way to July of last year, that the pair has gradually rode higher over the last year. It actually seems to be in a triangle of sorts. If the pair breaks below this level, which comes in right around, let's snake down to a smaller chart, right around the 0.9940 level, we could see a marked trend, an increase in the trend lower, and we could see the pair move back down towards the 99.20 or maybe even the 98.70 level. But if we do get a bounce here, we could get a marked bounce here and a change in trend, and we could see the pair at least move up towards parity and then the 101 level to test the top of the channel, which currently doesn't come much higher at this point at 101.50. So this is going to be important to watch, and it's basically going to be dictated by oil prices and risk sentiment in the next days. And then on Friday we have an important report out of Canada. The USD JPY is just interesting to look at because it's still trending in the range, but it is making higher lows, and the pair has been riding this trend line higher. And if we can get a break above 78.70, it looks like that's the direction the pair wants to go. So if we get any move down towards this trend line or a break of the 78.70 area, I think we could find buyers come in, and we could see a push higher ultimately towards the 80 level in the maybe not the so near term, but the 79.15 in the near term. Not just the Aussie unemployment report is due out tonight. We have a lot of information coming out of China. We have a retail sales report and a CPI report and a slew of other information, minor reports coming out. And we also have out of Japan the interest rate decision. So there could be a lot of volatility tonight, and finally a little bit of action that we can react to and make trades based on the price action and the convergence of levels that the pairs are trading close to. All right, this is Chris Keene. This is Currency Watch. Check out Keene Point of View. Everybody have a great day.